have a credit card disaster. Cue the fire. It is over, and for just about ever, I have been telling you to stop using them. But I understand, because 70% of you in this disaster that we speak of can't even pay for groceries. Also, before I forget, I have a trivia question. How much of your household wealth just disappeared? Take a guess. 1 trillion? 2 trillion? 3 trillion? How about almost 14 trillion just in 2022? So for those of you that are like, Bravo, it's really not that bad. Really? This is just the average Joe and Jane, down almost 14 trillion in 2022. Wait till 2023. This is going to be a flustercluck, which I will show you in this video. But we have another guess. Can you guess what percentage of Americans are having trouble paying their grocery bills? Well, I already kind of told you. That would be 50%, then 60%, and now 70%. And then next month, because you've subscribed, will be 80%. But if you did not subscribe, you won't even know. It's that thing, right? Right there. Just, it's on your side. Help a brother out over here who works every single day of his life. For the first time in a decade, I'm sorry, I missed, that would be plural, not singular. First time in decades, the cost of food has become a major issue in America. I'm wondering, do you think the people in charge know about this? Or do you think they were in control of this? You know, when you have all those food plants blowing up simultaneously, more than 2/3 of Americans are having a hard time affording groceries. So what do? Well, you get another job. And then after you get another job and we show full employment, then what do? Well, then you got to put it on the credit card, which you are currently doing. And you drain your savings, which you already did. So if you think credit card bills are bad now, again, 2023 is going to be just breathtaking. But Americans are having a hard time affording groceries as food costs continue to soar. According to the new data, you ask, how much soar? And I say about 500%. Well, that's if you go to Disney World or do anything in life. You have found that prices have skyrocketed in 69. Why is it? It's always 69. Can you guys round up by 1% for me? Huh? Throw me a bone here. So Swiftly reported Wednesday that 70% of shoppers say they're struggling to even pay the grocery bills. And 83% of you guys rely on coupons. Can you please sit down with my wife? But as the article goes on, and they changed it from 69 to 70, thank you very much. 70% of Americans are having trouble paying their grocery bills, but we got the word unfortunately. It's always nice. You got to throw that one in there. Unfortunately, food prices are only going to go a whole lot lower. Oh, nope. Never mind. Skip that. Higher because of global food supplies just keep getting tighter and tighter. And I did do some investigative journalism here. I went there just to check, make sure. The USDA is projecting that the upcoming orange harvest in Florida, I went over there, I didn't see a single one, will be the smallest since 1943. But I will show you what's the biggest. Also, if you are interested in trading oranges, it's ORAN, and I'll tell you, you guys are under the 200. Might as well skip that one. You are in a bear market on oranges. You had some support that is now going to turn into resistance. See that? Support all the way back. It touches 3 times. Now it is just resistance heading lower. So if you want to short it, I guess short oranges, regardless of what the news is saying. Also on your MACD, look, you see, you learned this in my bear market course. See, right? Let me move this. Also, if you want to get the discount, the holiday discount link down below, if you want to turn your savings account into actually digits that help you. This is where you buy. Okay, you like that? And you want to know where to sell, even though you're just like, wait, you just told me to sell this thing. Well, you sell it. That'd be my bear market course right there, which that would have been about that Lux Algo zone and the reversal. Let's make some money all the way down to the green zone. Even though you're not seeing, see the red and green thing, the strong sell, strong buy. You don't need to do that. Even though my course does teach you how to turn on all these indicators, so make sure you grab it. But as you can see on Disney, it's clean. You got a clean chart. I'm going to click auto. That's where I was just at. And I'll tell you, not looking good. You got the crossover on that one. For those of you that like TA, well, here you go. Here's your TA on Disney. I was just looking at. Also, while I was over at Disney World doing my investigative journalism, I was kind of curious about their stock and their revenue. And it looked like, when you look at this, you're like, wow, look at their revenue. That is great. Year over year increase. But you should see what they get to keep. That would be wokeism a big zero. What a great a couple years ago, 13, 14 billion in their pocket. And then shut the theme park down, negative billions, about 5 billion. It was at a quarter, and now barely. They're just barely scraping by. But the good news is you don't need to understand fundamentals. You could just look right here, and I can tell you, this is actually not your Warren Buffett, like it's always been good to me. Looking at this chart, no. Yeah, you should have been shorting that right there. Also, I have a Bravo's short list the companies that were in a bear market. If you want to take a look at that, it's currently $20 a month. That's it. That's like pennies a day to find out where to click, to right click. Look at that. Oh, also, I'll teach you something. Support and resistance. Remember what I was showing you about support? Well, you had quite a bit of support right there. See that Christmas line? Okay. Well, you're about getting ready to break that. And I mean, this Christmas line goes all the way back to 2014. And you're just sitting on it. You're also sitting on a head and shoulders pattern, which is bearish. So for those of you that are thinking, I just want to give my grandkids Disney stock for Christmas, well, you're picking it up for about, what are you at? 92, 93 bucks. Next year, it'll probably be worth quite a bit less. I mean, I could be wrong, but I think in a recession, I'm not going to think Disney's going to do too well. Actually, looks like nothing they're doing well. And congratulations, again. Go woke, get broke. You guys won't have all this extra money to spend next year because we will be pretty deep in a recession with no solutions. But you're like, I know the Fed will solve this. No, they won't. Household wealth down by 13.5. Let's just round that trillion on up to 14 trillion in 2022. Right now, you're down 14 trillion. What do you think it'll be like next year? Wait till this housing market, you're experiencing that bubble start to pop. Well, wait till it completely pops. Second worst destruction on record. Oh, hey, look, we broke another record. And here's another record I wish we wouldn't be breaking. This is store credit cards. Can you believe this? 30%. Hit 30% interest rate. Can I offer you a solution? You shouldn't be putting it on the credit card, but I know we're all struggling. I wonder if the government has a solution. No, it'll just make your life, it'll just be to make your life worse. It's always a solution. We got a solution here. Interest rates as consumer balances rise. You guys are at 30%. That is the struggle bus. Now all these people with all these high balances, they're like, well, let's refinance our house, which actually people are doing. Can you believe that? They're refinancing, taking out a HELOC just to cover their credit card debt. Now, let me tell you on that one, that's also not going to end well. But Bravo, give us a solution. It's the same solution I've had since I've started this channel 100 years ago. Start businesses. I don't care. In a recession, in a stimmy, everything's blow up kind of economy. I don't care what it is. Start a business, trade the stocks, but get in and get out. Because if you don't get out, you could have zero. But Disney's fine. That's been around for forever. Yeah, well, until they file for bankruptcy too. I mean, looking at their balance sheet, not looking so good. Or companies like this, a major car company is going bankrupt. But I thought everyone wanted cars right now. And this is such a popular name, Bravo, Carvana, right? It's like basically a vending machine for cars. And just like every company could go kaput. And how do we know when to get in and get out? Here you go. Here's your chart again. Carvana popped, what were you guys at? About $11 at IPO. Congratulations. You're above the 200. Below it, get out, but you do see a double bottom, so you may want to consider. And then boom, popped right above that 200. But what goes up? Well, must come, wow, really down. Can you believe Carvana? People were holding this at or still holding it. Hold, buy and hold almost 300 and, whoa, nope, wait, I was wrong. It even had more of a pump. Almost $400 for a sheet of paper that said Carvana on it. And now, congratulations, you are lower than at IPO at $5.05. So I guess get in now if you want a cheap stock. Isn't that just been crazy how we've gone through this cycle? And it's nice that everyone gets to see deflation, inflation, a boom like no other, like 1929. We still might even retest all-time highs. I know, crazy, right? Everyone wants to front run the Fed. Go ahead, because that downside is going to be a Disney roller coaster. But now you're seeing things like this. Look at this. One, credit cards I got to see in my life where everyone paid them off. Congratulations. Now you have it at an all-time high. Credit cards have never been higher than as of right now. And you want to know when they're going to be higher? Next year. Why? U.S. vegetable prices soar nearly 40% as water cuts crunch supply. And do you see that we might have problems with water in the future? Oh, I do. Now, these vegetable prices did not go up because the Fed go burr. No, it's supply, demand, and limited resources, weather, all these kind of things. China locking the people down, which they're still doing. Can you believe that? But the people will push back. And then the governments will push even harder, and then the people will go, oh, never mind. But ladies and gentlemen, boys and girls, in a down market, please be careful. Make money going up, make money going down. It's the same thing that I said a year ago when we were popping above the 200. Now I'm like, oh, we're below it. Right-click short, or depending on what platform you're using, right-click sell. Because money always has to be moving, just like your finger when you click the subscribe or the like button, right? And also take advantage of whatever offer I'm running down below. And I love you guys. Stay free, and I will see you tomorrow.